So December, Friday 18th. So we broke all-time highs as expected. Many people are now asking me, should I buy Bitcoin? This always happens when we go to all-time highs and everyone gets into the Fomo mode and they miss the train. They had so many options, they could have bought so many times. It was so easy, this chart, and now when it's like this, it's when everyone wants to buy, and normally it's when you take profits or sell. So take this in mind, because this is how all charts work in any asset. Of course, we can still go up, and it's quite possible we go to the 28, 27, 30K, 34K, but when the market cycle finishes, we will come down to test the support. So that's why Bitcoin always does this, as you can see on the chart. All-time highs, we normally, with all-time highs, sometimes we go up and we don't come down. So on this one, we came down, and now we moved up. We never came down to test this one. This one, we came down to test it. So we never know what Bitcoin can do after going to the tops, which for you to understand that we are now in uncharted territory, so we don't know until what people are saying ridiculous prices on Bitcoin. It can happen and it might not, but a real number could be the 30K, 34K, 28K, 27, until we come to test the support. So if you're an investor, you need to buy. You have these indicators, RSI, stochastic. I already explained this before. You need to buy when the candles close above on the weekly chart, above the 21 moving average or the 200s here. Those are the two most important lines. 200s to understand that we are in a positive market if we close above, and we are in an uptrend or starting off an uptrend, and the 21 moving average, which is this white one, that we are in an uptrend. So all the dips have been bought on the 21. As you can see, every time the price goes down, it stops there and goes up. And now many people are waiting to buy again on the 21 and the 12 moving average here, which is this top here. And also on now you can also use the whole time high as support, but we can have a week here and then push higher. So all these areas here are to buy from the 9.8 or the 10.9. I'm more saying like 10.9 area, and you can buy the dips. Every time it crashes, you buy, even if it goes higher after, you buy and then you keep on buying until this area of around 9.8 and 10.9, and then you put your stop loss below, or you can buy a little bit here, a little bit here, a little bit here, a little bit here, even until here, until the 5K, and then you put your stop loss below here, basically here. And every time it crashes, you buy a little bit, waiting for it to push higher again. This is a way of buying, or you can just prepare Trading View on your computer, on your mobile too. Put these moving averages, and just see what the price does. If it closes on the weekly basis above these moving averages, you just buy there and you put your stop loss below, like 1 to 3% below, and just wait, and then take profits on the tops when you see, because you need to make money. Only if you are an investor for 5 years, but if you want to make a few, it's good for you to take profits, because the market is always trying to screw you. So you need to understand how everything works with these lines and supports and resistance, where the price is holds. And then you create these trend lines. So we have many trend lines here. As you can see, this one was easy from this top. With this top, price came down, touch it, and now we are going to this trend line here. And so that's one of the targets of Bitcoin. It's here on the 26K more or less, and we have another trend line created from that goes higher. So remember, these are all market cycles. You have to wait for the candles to close to see if it closes below this one, then we can come down. You have to understand how to create channels, lines. But if you want to keep it simple, you just use the moving averages or the supports, like this support. This is a support where the candles close from the past, you know, like this line here. 11.7, it's very strong, or 11.6. And then the 14K here, which is aligned with this area here, and the 12K. These are our areas for a big bounce on Bitcoin, but because we went to all-time highs, this area here, it's a possible buy too. This one was already here, so, but the all-time high is an area of bounce. For now, it's going up. Many people are trying to short the market, so the price keeps on pushing higher, and we don't know until where it can go. So that was the Bitstamp chart. This is the Coinbase chart. The trend lines are a bit different on the charts. As we can see, this one, we already touched one of the trend lines from here. And we have this one here also for the second target. And this is where I think on this trend line will be the top of Bitcoin, and then we come to the next cycle. We will come down to test these supports here with this trend line. There's many ones. We will never know what Bitcoin can do. It can even crash and come down after everyone take profits. It even can come down here. Who knows? It's all possible. I don't believe, but I still believe, but who knows? These areas here with the 200, remember the 200 is most important, moving average. So even if the price crashes like this, you wait until it goes up. If it closes above, you buy here on this moving average. You don't need to catch this part here, although if you come down here and push higher, you make loads of profits, big profits, but you don't know. So if you want to play safe, you use these lines. So for the people who never listen, or don't know, on tradingview.com you can put these 200 moving averages. This is the 200 exponential, 200 simple, which is the red one, 100 simple, 89 exponential, 50 simple, and for the uptrends, which is the white one, this is the 21 exponential. There's also below, which normally are aligned, the 20 simple, so you can use one or the other. They are almost the same. The 20 is super strong too, so you can use both. And then you have this here, this is the 12 exponential for big parabolic moves. So this is for uptrends, or if the price goes down, for downtrends too, like here, it pushes the price down, as you can see. The 20 holded the price there, and then the 21 kept on pushing the price down. So all are important. You need to check what the price see on bull markets. The 21 and the 20, the white one, as you can see, holded the price all the time. And this is where the price needs to hold on the weekly for the bull market uptrend. If we start to close below on candles close, because we can have a week with the price and then suddenly goes up and closed above, and this is bullish. So as long as we close candles above this 21 here on the 14, 16K, basically this area here, it's bullish and price can keep on going higher. So you can use these moving averages, then you can do many things. Indicators, as we can see, we are on the overbought, we can still push higher. So we had a rejection here from yesterday, and now the price, people are trying to short this, and price keeps on pushing higher to liquidate people on 100x, 50x, 25x leverage. So that's why the price doesn't come down very fast, because it's liquidating. This is the all-time high here. So this trade also on the 21 and the 12 here are possible trades, like doing this and price pushes higher. But you need to wait for a candle to close above. So you wait, because it can do something like this, so you wait. And you can use your stop loss on this swing low and this swing low. And if the price goes down, you get out of the market. So As I said, there's two different things. One is investment. On the investment, you buy when the price is really low, especially on the daily below these dots here. As you can see, this is where you buy as an investor, and on the stochastic also on the low parts. If you're a trader, you can just do trades by here, sell on the top, and wait and keep on buying and selling on swing trades, daily trades. You can go to the lower charts, lower time frames, like 4 hours. See, people are asking, can we buy Bitcoin now? And the price starts to get red. And these can be trades. The price can bounce here or here. And here, this is the 200s as well. As you can see, it was coming down. You could have bought here, and you get all these move up. So you can just buy on these lines here. The 200s are here. Use the same. As you see, it's the same, but on the 4 hours chart. So if you're a daily trade or swing trader that you do punctual trades, you just wait for the price to close above, like here. So this one, as you see, it didn't touch the lines, so it was bullish, but the price, the 21 pushed the price down. Suddenly it touched the moving averages and suddenly it started to go up. So you need to be patient and see where the price closes on these moving averages, on all the time frames. As we can see, we are in overbought. So I think the price, we can have some pushes up, but the price will have to come down on the 4 hours. So these are the first areas to buy. All these moving averages you can buy a little bit and put your stop loss below here, or buy until here, and then put your stop below somewhere, maybe below this one here, this swing low. And you can buy, if you want to not miss the train, if it keeps on going higher, this is areas to buy, this moving average with the stop loss below this one. If we lose this one, we will come down to the levels I said before, and that's it. So back again, remember, on the daily, these 200s are quite important here. If we have a big move down and then suddenly up, because maybe big players want to get into the train, they will push the market down, they will buy here, everyone will buy back, and the price goes higher. So this is a bull market. All these moving averages are to buy. Your stop loss will be here or here, remember. So just follow the lines and these indicators and you'll be fine. It's all about risk management. And normally it's 1 to 3% down. I use 1 to 2%, normally 1%, but I wait for the candles to close above the moving averages and the supports, because you can do horizontal lines. Because as you can see, I made all these lines. You can do parallels, and you need to check from the history of Bitcoin, where are all the alleys and the areas where the price holds more, and use these as support and resistance. So you see that the price, like here on the 6K, holded as support, we crashed, we come to this one. As soon as we went above, we come down, tested it, and push higher. So you need to look for this for here, these stops. This area is very important, that we never passed. Suddenly when we managed to pass above, we touch it as support and push higher, and now we can use the other tops of these hills to do the same. Price goes up, comes down, touch the supports, and go higher. In bull markets, all the dips are for buying. So this is what you use on Bitcoin. It says you can do horizontal lines, perpendicular lines, these trend lines to see where are the tops or the bottoms. And yeah, so that's it. Try to keep it simple. And we are on all-time highs. Bitcoin showing its power when the markets are all unstable and the economy is down and the dollar is weak. So if you want to see, Bitcoin, gold are things to buy. As you can see, the dollar is super weak, the dollar index. Euro is strong now. And yeah, so that's it. Play safe. And yeah, risk management is the most important thing. remember, this is the chart of Bitcoin, the best asset of all times, 10 years, always going up, big moves down, but always holded these lines and pushing higher again. So just wait for it to come down to these lines, buy there when the candles close above, and yeah, and just be well.